community. Nice guy. Hard to know how much of the move in treasuries is attributed to that, but it was in tandem and reduced the 2-year yields. Coming back a bit after a pretty big rally on the heels of this. And Marie, do we have a sense of what this post means? I imagine it has to do with some of the provisions and agreements that were put in place after Geneva. And earlier this morning, speaking to the American press, Ambassador Greer was talking about that the U.S. did exactly what it was supposed to do, but the Chinese are slow rolling their compliance. So I imagine this is something that has irked the president. We heard yesterday from Scott Bessent, the Treasury Secretary, maybe foreshadowing this Truth Social, saying the talks have stalled. It seems like trade negotiations are moving forward with everyone else right now but China, which is the reason why we are watching for some sort of phone call getting scheduled between the two leaders. We will keep you posted on that. Right now, though, let's shift our attention to the morning calls. First up, Wells Fargo cutting its price target on Best Buy to $67, citing low room for error thanks to continued tariff uncertainty. Next up, JP Morgan raising its price target on Ulta to $525, noting better than expected earnings and market share gain. And finally,
I wonder where we're going to get an entry.
saying soft summer leisure trends aren't being fully
Gold's
anticipated
just taking
by
out the high as
analysts
well.
and investors. Sticking with travel, United Airlines and JetBlue yesterday agreed to a
Okay.
partnership that will allow travelers to use loyalty points and
Let's
book
see. It's
flights
goal
from
time. It's goal
most
time. It's
airports in
goal
the New York
time.
City area. I am so pleased to say, joining
Let
us
me put
now,
Bloomberg in my
United
headset.
Airlines Executive Vice President and Chief Commercial Officer, Andrew Nocella. Andrew, thank you so much for being with us. First, can you just tell us why you thought this was an important deal to do?
Sure, it's great to be here. Good morning. I think United is the largest airline in the world. In fact, I know it. But we also have a few gaps in our network, and we'd like to be a better choice for travelers in the New York City area. We're very strong on the New York side of the river, and we'd like to have a presence on the other side, along with in Boston. That's more significant than we have today. And this partnership with JetBlue is going to get us there.
How much is this tied to some of the issues that Newark has had with air traffic control
Hmm.
signals and all of the publicity around that and diversifying so that there are some options in the New York City region apart from that hub?
Sure, it's a good question. We've had a very long-term goal of being back at JFK Airport. We've been working on this particular partnership for JetBlue for a long time. So what's happened in New York and Newark in
Can't deny
particular
that hourly candle though.
is a bit of a speed bump, but the second runway will be operational again in
Can
just a couple
definitely
of weeks,
hold price.
and we should be back to normal.
Do you expect other types of agreements like this, Andrew, at a time when we know that airlines have been trying to come up with agreements to flesh out their service area, their options for consumers? Is this kind of the path to travel?
Well, that's a really good question. At United, we've always been focused on the consumer and providing choice, whether it's from basic economy, our most basic offering, to Polaris, if you're trying to go to Singapore and have a light bed, and now the Polaris Studio, which is a brand new product we announced a few weeks ago. So we're always trying to figure out what the next step is, how to innovate, how to offer more choice to consumers. I think the rest of the industry has just finally caught up with that. I call it the Great Reset. The other airlines are out there doing a big reset, trying to figure out how to gain footing again. Whereas United, we figured that out a long time ago. We figured out the consumer was in charge, and providing optionality was what they wanted. And we're just a step ahead, a generation ahead because of that.
What are you seeing right now that the consumer really wants when it comes to travel?
Well, I think they want choice. And what I'd say is the U.S. consumer has been very resilient. And for example, trips to Japan, I think, are just really in fashion right now. In fact,
Hmm.
Strive is one of our hottest destinations this summer, where everybody's trying to take families to Japan. I'm not sure we'll have enough seats, to be frank. But the consumer wants choice in a product range. They like the optionality of flying basic economy, but they also like sitting in a premium seat from time to time. And most importantly for United, they like the optionality we provide to go around the world, whether you're trying to go to Mongolia or Cape Town or anywhere in between. United
Yes,
offers
gift
that.
money day, bro.
It's funny you talk about Japan because I remember
Yeah,
last
that
year
5 minute candle on gold was crazy, bro.
nailed it when
We
the
took
yen
out this
was
morning's
in
low
their favor in terms of doing the
and then
gold
just
rush.
reversed straight
But
away,
we've
and then we took
heard
out the
coming
high
and going this summer
right
that
from this
with
morning as
gold
well.
going
So
up, there's all this
I'm
concern about
thinking,
what to spend and travel to
right?
spend.
I'm thinking we could have a bounce out of this area higher, right? And with this 5 minute candle that formed, we can potentially look for a retest, right, from this 5 minute candle and go long. That's what I'm looking at right now. Obviously, you know, we've got that core price index data that's coming out. If someone needs to double check that for me. I think we do have red folder. Core PCE price coming out shortly. Right, obviously if we want a safer stop, I'll probably put it like down here, you know. Because this is a daily play. Right, this is a daily play. That's how I would kind of play this. I mean, gold can definitely give us, you know, 460 pips today. It definitely can. Gold can definitely give us 500 pips today. I mean, if you look at yesterday alone, that was, you know, well over 600 pips. So I'm looking at this and trying to just see where we can position ourselves. You know, I'm looking at GU, I'm looking at AU. What's AU doing? AU just clapped down again. AU looks like it can run for the low one more time. AU's definitely giving me run the low one more time before being a buy. Let me set an alert for that. Set an alert for that. You know, that would be the setup that I would go for, right? Obviously, bearing in mind that we don't actually break this low. That's what we're playing. But obviously, if we want a tighter stop, right, it's like something that's a little bit more tasty, I'll probably just play that 5 minute, the M5, and see how that does. I mean, how many? All right, so it's about 63 pips. So let's just say we give it 70 pips, yeah. Yeah, let's give it 70 pips. And then obviously we got yesterday's Tokyo sessions high as target one. Right, that pretty much almost gives us a 1 to 3, to be honest. So I don't think this setup is bad at all. I think it's quite decent, in fact. So the dollar, on the other hand, to be honest, right, when I look at the dollar, obviously we can get a retracement anywhere inside this level. I don't think we're gonna pull up that high. Obviously, we've got the red folder, so that might affect things, but I don't think we're gonna retrace all the way back up here. You know, we dropped from here. We spent barely any time here. So I don't think we'll revisit these highs. I think we'll just have a slight pullback, what we're currently seeing, and then drop down. But when the news does come out in 6 minutes, the red folder does come out in 6 minutes, I wouldn't be surprised if we potentially get one more run, right? I wouldn't be surprised. If we actually get price running these highs, I would not be surprised, but I'd still look for a sell. Right, so yeah, let's just see how these candles print, you know. It might not be the 5 minute, we might have to work with the 15-minute candle depending on how it closes, and then look for our buys for the rest of the day. Um, if that's the case, then so be it. But that's what we're working with right now. You know, I like these candles that EU's printing as well. It's giving opportunities for sure. I want to see if we can kind of push through here. Maybe potentially later on in the day we can use this as a breaker. Look for longs here. Target 1 yesterday's Tokyo. Target 2 Tuesday's Tokyo session. Target 3 is going to be the high, right? The high of the week. So I do want to see, you know, in this daily candle, we just pull back, make the low of the day somewhere around here, and then engulf these highs and give us the high of the day. That's literally all I'm looking for. That's it. They're just really, really simple. So we're gonna try to rinse the hell out of these pairs, you know, whether it's Euro USD, whether it's gold, I don't care what it is. All I know is I'm being aggressive today. Okay. I think today is a good day to be aggressive. So let's see how markets play out. Let's wait for this news. Look for an entry on the news release. If we get it, great. If we don't get it, then we'll wait for NYSE. And if we don't get it during NYSE, we'll wait 30 minutes, right? And see within that new hour if we get an entry. If we don't get an entry, then we will still monitor price. We will definitely catch something today. All right, we're T minus 2 minutes and 50 seconds. Gift says, I want to be aggressive too. Last day of the month. Hopefully we finish strong. Pause. Yeah, let's see how it goes, my bro. Let's get it done. Let's get it done. Let's get it done. You think Trump is speaking now? Let me check Forex Factory. I got my caffeine here. I'm waiting for it to cool down a bit because I don't want to be too hot. Okay, let's go to Friday. I don't see anything about Trump's.
Once again on display.
The Saudis are open for business.
Yeah, I don't see anything about Trump right now, bro.
Another big
Got GDP for the CAD, PCE for dollar, trades good, personal income, wholesale inventories.
The numbers will be quite substantial.
Up to the minute reporting.
Driven the price of oil down.
Chicago PMI, inflation expectations, Bostic from the FOMC speaking. Yeah, that's about it, bro.
Making money isn't about drowning in emotions. It's about understanding what's
Let's see what we're gonna get. What are we gonna get?
Markets are the best way to glean
45
signals from
seconds.
noise, and that is what we try to do every morning.
Set some alerts.
This is Bloomberg Surveillance.
If we start to drop heavy, if we start to pump heavy,
has the report.
like hopefully you know,
crucial data and
get
expert
an
analysis
entry.
at
You know what I
terminal
mean? Like
speed.
I do
Nobody
want an
covers
entry.
jobs day like Bloomberg.
Whether it's a W, no,
Africa,
it will be a W. I'm not even gonna say that out
rife
loud.
with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and
Let's see what
reporting
gold
on the
finna do.
issues impacting the region. Join us as we
10
get
seconds.
to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
25 seconds to go until we get the key U.S. economic data of the week, core PCE, that key inflation
Okay,
metric.
personal
that the
income's
Fed
at
does look at. We also
0.8%.
get a read on personal income and spending, which is important given the state of the consumer and where we are.
Still
We
waiting
are,
for
of
that
course,
core
also watching
PCE.
a rollover in futures, possibly on the heels of the True Social posting, ratcheting up pressure on China. Right now, with those numbers of personal income, personal spending, core PCE, let's head to Dallas, where our own Michael McKee,
Okay, remain the same at 0.1%. Okay, that's a little bit muted, to be honest with you.
Getting it dead, I wish.
It's a little
we
bit
don't
muted.
have those numbers yet. They haven't dropped from the
Which
Commerce
is, I
Department,
guess
but,
it's okay.
Here
You
they
know what I
come
mean?
right now.
Guess it's
Personal
okay.
income up 0.8%. Personal spending 0.2%. Spending went up by 0.7 in the month of March. So a drop off there. We're waiting on the price numbers to come through here, and we have a PCE price index headline of just 0.1%. Which pushes the year-over-year number down to 2.1%. We are just 0.1% away from the Fed's target. The core is up 0.1%, and on a year-over-year basis, that falls to 2.5% from 2.6%. The other number that we're watching today, the advanced goods trade balance, comes in significantly. We're going to have to get a breakdown on that in a couple of days when we get the full numbers for this. But 87.6 billion, that's down from 162.3 billion in the month of March. And of course, that was when everybody was trying to pull forward all of the imports they could get before we got to the tariffs. So a major change here in the trade situation that should add to growth for the month of April. And PCE comes in as expected, lower than anticipated. Incomes were good. I'll look for the breakdown on that. And personal spending falls off, again, after people maybe front run the tariffs a little bit.
I'll let you parse through some of the details there. Just to reiterate, as you were talking about, Mike, 0.8% increase in personal income, and you did see a real increase in personal spending of 0.1% versus the expectation of 0%. When you take a look at markets, it is the wrong kind of maybe upside surprise when it comes to consumer resilience, at least for the bond market, where you do see a bit of a retracing of some of the rally yields marginally higher across the curve, as the 2-year is still maintaining some of the declines.
Okay, so nothing yet so far. Gold's kind of blipping a little bit, reacting a little bit. EU still inside of the same level. I mean, it's not really done much, this PCE, which is fine. Stock market hasn't really reacted all that much either, looks like. All right, so again, with this setup here, obviously it depends on how the candles form. Obviously, to actually take this long setup, we want to be up here. But let's just see how that does. No entry just yet. No entries just yet, guys. We're monitoring, we're monitoring. EU alert. Let's see, let's see. I do have an entry on gold when we had that spike lower earlier. I'm just gonna go break even on that just in case. I feel like this is an okay area to go long on EU, you know? You know? But when we look at the flip side on the DXY, obviously that 5-minute candle's up here. There's a lot more room to the upside for DXY to reach towards, right? The only other thing is, right, where prices currently reacted from during Tokyo, right, it's a pretty decent area. Obviously, we've broken these structural highs here as well on the lower time frame. So realistically, I kind of, I'm anticipating quite a aggressive move today, But we'll see how that plays out. All right, looks like EU's kind of holding that level there a little bit. Got a slight bounce now. Looking at gold holding that balance range as well. Depending on how this, 15-minute or half-hour candle closes, we can just use it as an entry, really. We might have to just be patient a little bit.
So while consumers are outspending, they are becoming increasingly cost sensitive.
But for the Fed, this is good news. We have a resilient economy, resilient consumer, and inflation that has been decelerating now for the past couple of months.
Is it enough for the Fed to potentially, if inflation's coming down, to think about cuts this year?
Well, I think the Fed is already thinking about rate cuts, but the window of opportunity for action is very limited. Against the backdrop of negative growth in the first quarter, against the backdrop of that deceleration of price pressures, the Fed could act to cut rates minimally, maybe 2 25 basis point cuts mid-year. But as we look out towards the second half, further out towards the fourth quarter, I do expect a more positive impact, a stronger impact from some of these trade policies, from tariffs, to set into price pressures, risking upside momentum in costs and really removing any window of opportunity for rate cuts and potentially shifting the conversation back to rate hikes by the end of the year.
Wow, rate hikes at the end of the year, and that's driven by what exactly? Because the concern of inflation driven by tariff policy?
Well, again, right now, the Fed is walking a very delicate line. As we saw in the FOMC meeting minutes, there are downside risks to growth and employment, which we've already seen that storyline playing out, as I said, in the first quarter, and likely to see very minimal momentum in the economy in the second. But by the second half of the year, those upside risks to inflation, I do think, are going to become more prominent. And the Fed has to focus on getting inflation back under control. Now, the numbers this morning in the PCE were favorable. That headline is moving closer to 2%,
Gibbs
but the
says,
core
was
numbers still
expecting the
remain
news to bring some
stubbornly
heat, lol.
sticky, up at 2.5. And
Same
again,
here,
the
bro.
risk is
Was
to the
expecting,
upside.
you know,
Lindsay, Neil
some
Dunham was talking
moves, some
earlier this
jumpiness, but
morning that the housing market is kind of the fly in the ointment for this argument, that you've seen
kinda
a real
just
fall
chilling.
off in terms of activity,
mean,
people's ability to
in
buy
any
homes.
case,
You've seen even prices come down in
I
some
know,
regions for the
like,
first
you
time
know,
in
as I
years.
said in the Discord,
So
I
do
know
you
today's
feel
going to
like
be,
that aspect of inflation, which is a
you know,
massive
from one, I think we'll
really
probably have to
going
look
to
at this
work
for
for
5 hours
a
today,
very
5, 6 hours today,
different
to
conditions?
really find a
But
good
actually,
entry and
quickly
be
speaking to that
aggressive.
area, what do you make
You
of
know,
their
find scalps as prices
Well, I
moving.
think when we look at the inflation numbers, it's going to be very
So,
difficult for the Fed to achieve a sustainable 2%
yeah,
level without further reprieve in housing costs. Remember,
I want to see
CPI,
what we'll
shelter
do.
costs are still up over 4%, so that's double what the Fed's intended target is. And so
So
it's
I'm not
going to be
really
very
all that
difficult for the Fed
surprised.
to achieve, again, that
Dollar's
broader
back
measure of price
pushing
stability without
down.
further
He's held
reprieve in
that
the housing
M5
market.
candle.
That
It's
being
back on the
said, we
rise.
haven't yet seen a sizable amount of relief.
Oh,
Now, price pressures
that
have
could
slowed,
be
but nominally prices are still
last
very
chance saloon.
elevated
That, you know,
as would-be home
that
buyers
15-minute
face
candle
near
looks incredibly
record
strong.
low affordability rates, so there's still a lock-out effect. And
I see.
existing homeowners are still facing a lock-in effect, whereby they're largely precluded from offloading their
Okay.
existing property for fear of resetting to significantly higher rates. Remember, even if you're buying a lower cost nominal asset, if you're resetting from sub 3% to up near 7%, well, that's going to result in a
That's quite the
sizable
push though
increase
on the
in your
euro.
monthly payment, which most Americans simply cannot afford. So that lack of mobility, both into and out of the housing market, I think is going to slow any further progress for the price pressures that we're
It's
seeing
quite
in
the
this housing
push.
component.
There's a theory out there that the tariffs and trade debates will
You see,
dampen
when you get
consumer
these
and
type of
force
candles,
impact
right,
on margins, whether it's people getting more concerned emotionally
where
about their spending habits,
the
as
current
well as
candle.
companies that aren't
Okay, let me
willing to
show you
invest
another
nearly
example.
capital investment plans the way that they have
Right,
in the past.
so
Why do you
this
think there
candle,
won't be enough of a dampening
look at the
effect
wick.
to counterbalance
The wick
some of
takes
the
out this
inflation
low,
and
this
price
low, this low, this
spending
low,
that we're
this
seeing
low,
in the
this low here.
consumer?
And then it prints a
The
very
biggest
bullish,
impact that
strong
we've seen
candle.
thus far has been
There's
on
a
the
very good
softening
chance
of
that
confidence numbers. Consumer confidence has fallen to a multi-year low.
there's a
As
very good
consumers
chance that the
anticipated
next
the
candle is also
economic
going to be
conditions
bullish,
coming down the
or there's a
pipeline,
very good
driving inflation
probability or a
down
higher
to
probability
a
that that candle is going to
multi-year,
continue,
multi-decade high.
or price is
On
going
the
to
recent
continue
side, we've
pushing up,
also
right?
seen that. We've seen
So we
that
get the next
impact
candle, we get that
on
15-minute
consumer
candle. Look at this
confidence
this
coming back
15-minute
to a
candle that we're currently
multi-month
printing. What does
low,
it do?
with 90%
Takes
of
out the
businesses
prior
saying
15 minutes
now
candles
is
low,
not the time to
and
hike.
then we'll
It's not
print
the
in a
time to
very
invest. But as
full-bodied
we saw this
bullish
morning, when we
candle
look at
right
that
now.
hard data,
So this
consumer
is
is
looking
still
incredibly
spending.
bullish, you know,
Businesses
at
are
least for the
still
time
investing.
being.
So
You
it's
know, for the
really more
next, you know,
hopeful,
hour,
more
we may
concerning that we are
potentially
actually
continue pushing
changing
up, you know.
behavior. And so again,
So
that's going to perpetuate
realistically,
this resilient
with that
narrative for the
understanding, look, even on
economy,
the
both on the
hourly
consumer
candle,
and
this one
corporate
took
side,
out that
and help
low,
to
took out that
offset
low, and then
any
we had a
falling
bullish candle.
inflation and
The
still
next
give
candle
us
pushed up. So
facing
what am I
significant
saying
downside
exactly?
risks
What I'm
to
saying
price
is,
pressures.
I think
Makes
within
sense
the
here.
next
Thank you
hour,
so much.
we need to
Reporter
anticipate there being a
insights to
pullback.
parse through strong
right? Obviously, new candle's gonna come. It needs to create the high or the low of the candle. If we're looking for a bullish candle, then we need to see market create the low of the hour and then potentially print us the high of the hour, right? So that's what I'm gonna anticipate. And to be honest, we might be able to get a little retest here. Continuation. Looks like gold's also slowly printing high as well. We got a very nice look. Look at half 15-minute candle. You see how it's wicked out the prior candle's low? Even this 15-minute candle as well did the same thing. So it's wicked out the low. This looks like it's going to print quite bullish, engulf this high. Right? If we get that, we can work with this 15-minute candle. Alright, up here. To be safer, we'll cover the low, give it a 100 pip stop. Target the high that we created yesterday. That's almost a 1 to 3. I don't think that's too bad. I think that's quite alright actually. It's not bad at all. That is not bad at all. Also, I think there might be a slight pullback here. There might be a slight pullback continuation. Okay. Oh, here we go. Trump's moving mad, guys. I haven't seen Trump speaking anywhere, Gift. I've checked Forex Factory. I think he's made comments, but I don't think he's having like a speech per se.
Agreement, that occurring after Treasury Secretary Scott Bessent said trade talks with China have stalled. The president also met with Fed Chair Jay Powell at the White House for their first in-person meeting since the inauguration. The Fed says that the president invited Powell to discuss economic developments, growth, employment, and inflation. White House Press Secretary Caroline Leavitt says that Trump pushed Powell to lower interest rates, but did not discuss whether Trump would seek to remove Powell from his role. And the Edmonton Oilers punched their ticket to the Stanley Cup final last night with a 6-3 win over the Dallas Stars. The Oilers were led by center Connor McDavid, whose breakaway goal swung the momentum in Edmonton's
Alright guys, still waiting, still waiting.
The President of the United States does say he wants to keep a more mutually
Who else have we got on the stream?
Trade balance with these countries. What does a country like Egypt and Kenya and some of these others have?
We got
to
Gift and
provide
who
that
else?
won't completely dent their own GDP?
Come say hello in the chat
Tough.
box.
I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China in 2023. It's something like $40 billion. And whatever the tariff rate ends up being on China, it's going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Okay, we've got Levent. How you doing, bro? Sorry if I butchered your name, but how you doing? You good? Welcome to the stream.
Well, we got that key.
I don't think I've seen your name before. Is this your first time here?
Markets
Let me know.
Retraced most of any moves that you can see. Two-year yields still marginally lower. 10-year and 30-year yields marginally higher. Didn't really move the needle. What is moving the needle maybe is what you can see in the stock market. You do see flat market turn more negative, although that's also retraced. It seems like everyone's trying to figure out how to understand this, which is the trade headlines that we are getting, and the latest being President Trump, and the latest out on Truth Social, having to do
what are you looking at, bro?
with China and no more Mr. Nice.
You looking at any moves? Any trades? What's your favorite pair? Do you like looking at gold, euro, the dollar? Let me know. So far, it looks like we'll probably have to wait for stock open. Oh, and Levent, if you haven't joined my Discord, there's a link to Discord in the description box. Yeah, I post a lot more updates inside. Yeah. First time in your live was in Dubai last year with our training course. A newbie currently using the bot. Okay, amazing. Well, welcome anyways. Do you do any trading yourself, like manual? I mean, if you went for the course in Dubai, then you should have had some manual training or some manual trading done, shall I say. Levent. I might know you, you know. I think I've seen that name somewhere. Trying, lol. Yeah, okay. Where do you think you're going wrong? Maybe I can help give you an answer. Looks like Gift knows who you are, bro. You said I'm the problem. Damn. That's crazy. Just straight to the point, huh? I'm the problem. And time. Okay. I got you.
So if I look at that whole slew of data, ultimately, Lisa, it is quite messy. It's going to be messy for a little while. I don't think it moved the needle very much, really. It's very difficult to interpret, clearly. And then when you look at what's going on with imports, it's impacted by so many different things. On the one hand, you've got the port issue that you were referring to. On the other hand, you had so many importers who imported early to try and front run the tariffs. So you don't know whether it's payback for that we're seeing. Are we just seeing a reduction due to ships not being able to dock? Just really hard to read the data right now. I think that's where I'd come. I haven't changed my views on the back of the higher frequency data that we're seeing right now.
When you say messy data, do you mean just basically paralysis, lack of clarity in Washington?
No, actually, though there is, I mean, that's happening. But what I would say is I'm really referring to the fact that the actual data moves are distorted by people's behavior, companies' behavior, which is in response to
That's
this
funny.
type of
APG
shortage. So, for
alumni.
example,
Come on.
we didn't really have GDP
Yeah, you guys
contraction
connect,
by that
man. You know,
amount
have a
during
convo.
Q1. We had a massive expansion in the trade deficit on the back of front running of imports. For example, you just don't know how much of that is bleeding over into the next month's data and will continue to do so. So, for example, we see a massive contraction in imports. In the second quarter, you're going to get an artificial bulking up of GDP. So I think right now, a lot of the data is being impacted by these moves which don't really talk to the underlying strength of the economy. In particular, a lot of people have been talking to the confidence indicators. I really think that this is one time when confidence indicators may follow hard data rather than hard data following confidence indicators, because those confidence indicators are so impacted by rhetoric and overnight tweets, for example. And the hard data is how people are actually responding.
So now, if that's the case, and I'd just love your take on this,
Okay, so you said 11th says in the chat box, so I'm trying to master the London session opening approach and New York first 15 minutes, etc. What do you mean by that, bro? As in, like looking for a entry or a setup in the first 15 minutes of the session open? Is that what you mean? If you jump inside of my Discord, yeah, bro, send a chart or maybe try to send a chart inside of YouTube. I don't think the chat will allow you, but you can join the Discord and then send charts in there, and then we can all have a look at it. Gold's definitely trying to decide what it wants to do right now. We're chilling here. Which, again, is not a bad thing if we chill here right now, you know? It is not a bad thing. Remember, if the new hour opens and potentially we get, pushed down lower to get the low of the hour somewhere here, and then we find an entry, I'm totally fine with that. Bless will do that via Discord. Amazing, bro. Gift says, I just want gold to grab liquidity below before rocketing. I feel like I might get left behind. Nah, bro. You won't get left behind. There's a huge range, yeah? Think about it. I think, yeah, yesterday's target is really easy. I think that's like the low hanging fruit. I think that's like, I don't want to say, you know, talk in definites, but I think yesterday's target, if we are going to be bullish, I think yesterday's target is for sure. It's for sure you're right on, right? And then if we can go for Tuesday's high, and, you know, even better yet, you know, the high of the week, that would be amazing. But I do think yesterday's high is quite good. So even if gold starts pushing up here, bro, go on the lower time frame. If you remember the video that I made, like that video I made like months ago, right? Remember yesterday I said I bet gold would dump. Yeah, yeah. Do you know what it was? I think I woke up at like 4 a.m. and I checked gold, and I saw gold crashing down. I'm like, well, it looks like Gift was right. You know, it was a good thing that I closed my position yesterday, because boy, that literally slapped all the way back down to entry. Look at this. Look at this candle on the hourly, man. Like this type of play, you know, consolidating. Tokyo session this morning, we haven't went anywhere. Prior to NY opening, we run for the low aggressively, run the stops, push up. If we get a really strong bullish closure, I think gold's game to push up, guys. I genuinely do. I genuinely do. I genuinely do. So, you know, with the evidence that we have, or the information that we're working with, to be honest, bro, I'm looking at any potential pullback opportunities to enter gold, and make sure, you know, if you can't really afford, or if you don't really want to hit stop, go with a bigger stop and at least catch something, even if it's a 1-to-1, 1 to 1.5, right? Or if you want to be aggressive, right, enter small stop loss, you know, decent TP, and just keep hitting it, keep hitting it. So that's the plan for today anyways. We'll see how that pans out. I'm trying to see what this candle wants to do once we get a closure. EU's not really all that clear right now. Let me take a look at GU. Okay, so GU's definitely had a more expansive move higher. Alright, it's had to play into that 5-minute candle. It's had a push up. That's quite a nice move there, you know, on the 3-minute little imbalance play. Alright, new hours here. That's my alarm. Let's see what's happening. Let's see what's happening. Half-hour candle's closed. 15-minute candle is cemented. Hourly candle, a new hour candle as well, guys, yeah. For Owanda, there's a new 4-hour candle. Like, look, even, well, on Owanda's 4-hour candle, even how this candle closed is just giving bullish. I can't lie, guys, it's literally just giving bullish. Obviously, the 4-hour candle hasn't actually officially opened, but if this 4-hour candle closes, you know, above the prior from sweeping the low, like, I'm game for this really going for it, guys, man. I don't want to be so focused on just looking at just one side of entry, or just only seeing buys for gold, but, you know, following my model, and, you know, what I look out for, this is following it to the T, to be honest with you.
Nice guy. We also heard from Treasury Secretary Scott Bessent, saying that negotiations remain in limbo.
I would say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks, and I believe we may at some point have a call between the president and party chair Xi.
Let's get the latest now with Bloomberg senior editor Michael Shepard. He's in Washington, D.C. for us. So, Mike, what do we know about this? It looks like a breakdown in U.S.-China relations.
Well, we are definitely getting the feel-good vibe fading from the talks in Geneva. It's clear that there is a rupture in the conversation that had moved toward maybe easing some of the trade tensions between the world's two largest economies. Remember, during those talks in Geneva, they'd agreed to lower the significantly higher tariff rates on each other's goods. The U.S. had put its rate as high as 145%. That was lowered to 30% pending further discussions, and China did the same. Now, as part of those discussions, the U.S. had been looking for China to also lower some non-tariff barriers, and that included controls on exports of things like rare earths and other critical minerals that are important to the technology supply chain here in the U.S. Now, while the president didn't spell out in his Truth Social post what set him off there, Jameson Greer, his top trade negotiator, indicated today that it may have something to do with China slow-walking the removal of some of those barriers on exports of critical minerals, Matt.
Well, we heard from the Treasury Secretary Scott Bessent last night saying that talks between the two countries have totally stalled. And his view was that maybe there needs to be a call between President Trump and between President Xi of China. We know the two haven't spoken since before the inauguration. We also know that the Trump administration has been angling for a conversation between the two. Are we any closer to that?
Well, Greer said this morning that they were still working to arrange this call, and a conversation between President Donald Trump and President Xi Jinping certainly could break the ice. And we did see that having some effect when Trump spoke with European leader Ursula von der Leyen after Donald Trump threatened a 50% tariff on imports from the EU. And that led the president to move back his deadline for imposing that much higher tariff rate to July 9th, pending further negotiations. So it could be a critical icebreaker, and yet China and the U.S. remain very far apart. The issue of export controls is a real one, not just for the U.S., but also for China, which has objected to limits on exports of semiconductors and other sophisticated machinery needed to advance their ambitions in areas of artificial intelligence and other sophisticated technologies.
All right, that is Bloomberg's Michael Shepard joining us from D.C. with the latest on the negotiations between the world's two largest economies. But let's talk a little bit more specifically about the U.S. economy and U.S. consumers hitting the brakes in April while inflation remained tame. We're going to break down this morning's data with Bloomberg's international economics and policy correspondent Michael McKee joining us from Dallas, which is fun. So let's talk about the PCE numbers that we got at 8:30 this morning, really coming in across the board. Right on the
so we're still watching gold. Dollar is bouncing back a little bit
as well. I can't imagine this moves the needle too much.
Let me turn down Bloomberg a little bit. Okay, so we are getting a slight bounce up here from the dollar. Right. I still think we should be heading down lower. Gift says, guess we'll have to be patient, lads. Yeah, exactly that. We'll just have to chill and sit in this for a little bit. Even though we did get that candle print, we didn't actually get a new high. I mean, we can still get a new high, but we're still just chilling around this price. Yeah, just as Gift says, we just have to be a little bit more patient. This is quite an interesting half-hour candle that we printed as well. 15-minute looks okay. Yeah, so like I said prior, you know, hourly candle, you need to form the low of the hour, high of the hour. Let's just see how this progresses, you know what I mean? For now, we just got to watch. We're still on the bullish side of things. We're looking for higher prices. We're also looking for higher prices on gold. Gold is kind of still in a little bit of a mini range, just forming this semi-flag pattern. Still looking for gold to head higher, of course. So we'll see how that plays out. But like I said, you know, from the jump of the stream, we might have to be on here for 5 hours. We might have to look at price for the next 5 to 6 hours, to be honest with you. If markets are ready to move now, it will. If it's not, then we'll just have to wait.
Michigan data.
Let's listen to Bloomberg in the meantime.
Well, Bloomberg's Michael McKee there, our policy and economics correspondent. On the earnings front, a mixed outlook for retailers from Gap to Costco to Ulta and Dell. Tariffs maybe impacting the supply chain, changing the way businesses think about that, and consumer sentiment weighing on demand, as well as discussed with Columbia Threadneedle Investments senior equity analyst Mari Shore, who joins us from Boston. Mari, first of all, what do you make of the Gap issues? Because they said tariffs could take a $300 million bite out of their bottom line, and the shares have lost about a fifth of their value in the pre-market.
Yes. Thanks for having me. Gap is trading down in the pre-market, as you said, I think for two reasons. The first is that the expectations had risen significantly into the print. So even though the Gap and Old Navy brands are taking share, the sales results were not as strong as some had hoped. And then the second point is on the tariffs, as you said, management did not include the tariff impact in their guidance, but it will be a significant impact, about 10% to full year operating profit. And so that is now something that investors are also having to bake into their numbers.
Yeah, it's interesting to dig into the details of their portfolio. Like you said, of course, the namesake Gap brand and Old Navy doing well. Athleta, Banana Republic, a bit of a disappointment, even though I love both of those lines, but clearly that didn't help in these earnings. Talk to us a little bit more about that tariff impact, because they said that they anticipate as much as $300 million worth of impact here. They're going to take some mitigation efforts. Does that number seem large to you? Seems large to you? Because you take a look at some of the sell side reaction, and a lot of folks were surprised, to your point.
The number does not seem large to me. After the Liberation Day announcement in early April, I immediately began doing analysis and running numbers for all of these companies, and Gap actually screened as one of the companies that was most exposed here. Some of that is given the nature of their sourcing, but also the fact that they sell most of their product domestically, whereas other global brands are selling a lot of their product in international markets as well. So as you said, they talked about a $300 million gross impact, but net it will be about half of that, which is about 10% to full year operating profit. So that number does not surprise me. I think overall Gap is one of the companies more impacted, but there have been others like Target, for instance, where I also thought we could see a greater impact, and management talked about being
new
able
high,
to
new high, new high,
fully
guys. New high.
offset the tariff impact there. So
We got a new high on gold.
went through retail earnings, the tariff impact
New high on
was
gold now.
actually a lot less than investors
So we
had
are
expected.
printing higher ever
In
so
some
slightly.
cases, like you mentioned, Gap,
For our candle
investors
looks
had
really
not been
healthy.
forecasting or assuming any impact in their numbers. And so now we are having to bake that.
I want to see us expand a little bit and then get us that pullback now. I want to see a little bit of an expansion. I think we've got to start looking to buy gold from now, really.
Goods from China.
I think that's what we got to play.
You know, less than 30% of their goods come from overseas, and I would have thought a big box store like that.
I want to see a little bit more of a push up.
Manufacturing. What do you think about Costco?
And then getting on a pullback.
About 70% of their total business is food and consumables. So most of that product is sourced domestically. And then, as you said, in terms
maybe
of
the next
product
15-minute candle we push up a little bit more.
Overseas, it is a much smaller percentage of the overall mix. I think Costco has been one of the most consistent models for many
But this is okay.
years,
It's okay so far, guys. It's
in all
okay.
of retail, and we
It's not
see
amazing,
that
but
momentum
it's okay.
really accelerating in the current environment. I think any company that is offering that mix of value, convenience, and a broad assortment like Costco, Walmart, Amazon, those are the models that we see taking share across channel and across category in the current environment.
All right, Mari, great to get some time with you on this Friday. Have a great weekend when you get there. That is Mari Shore. She is Columbia Threadneedle Investments Senior Equity Analyst. And next hour, we'll be speaking with Gap CEO Richard Dixon, going to get into some of these issues around tariffs and the impacts to Gap's business. But let's take a quick check on futures. We're less than 20 minutes until the opening bell. You can see we're taking a little bit of a downdraft right now, but it has been a banner month for the S&P 500, up 6.2%. So some of that superlative probably is going to stick, even if we slip a fourth or 0.4%. Much more market action coming up next. This is Open Interest.
So we're still chopping, which is not a bad thing at all. Alright, for consolidating, we're waiting. There's bound to be a move. We're very close to NYSE, so we just gotta wait for that now.
Global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get to high interest now. Look what's making headlines around the world. Israel has accepted a U.S. ceasefire.
Okay, so we are dropping. We're dropping on gold. We've had a swipe. We've had a slight push up on gold. Now we've dropped. I'm thinking this is an area where gold may push up from again. I know we've dropped, but we may hold. Euro, EU, nothing much. GU, I reckon GU might have an imbalance play here. Push up. But let's see. To be honest, if gold comes down, it comes down, innit? Like, it's not really the end of the world. But we do need to wait for NYSE. Okay, gold's come down some more now. I'm gonna set some alerts. Okay, so the picture is changing ever so slightly. We're having quite an aggressive run lower now. Alright, okay. That definitely changes things. Okay. We need the picture to improve if we are going to go for longs. Because right now, this price action that we're getting is not an indication of higher prices. Okay, it's just not. So let's just wait. Let's take a look at the DXY as well. DXY looks okay. It's not really giving much away in terms of buy or a sell. It's just okay. Yeah, let's just keep monitoring and watching charts and act accordingly.
And that's difficult to game out. But when you have tariffs, when you have trade fighting, when you have geopolitical tensions, there's just a lot that you don't know. And this is a way for CEOs to sort of confirm to investors that they're not exactly sure where things are going to be heading in the next half.
I don't know who originally came up with it, but Howard Marks always says it's difficult to make predictions, especially about the future, right? There's always uncertainty. Yes. That's how it is. How much are CEOs and C-suites using this kind of excuse in earnings reports to buy time?
Oh, it is. It's all about buying time. The reality, though, so to Howard Marks's point, which is a great line, to his point, there is an added level of uncertainty now in that you don't know what's going to be coming in terms of levies on the products that you either need to build what you're building or that you sell. There's just a lot of price instability that's going on, and that makes it's always difficult to predict where your earnings are going to go.
Is there any way to quantify how much more uncertain it is now than, say, it was last quarter?
Well, it is more uncertain now because, I mean, just based on the numbers that we're seeing, the way that it's being played up is at historic levels. What's interesting to me is that it's higher than what we were hearing in 2020 when COVID broke, and it's higher than what we were hearing in 2008 during the global financial crisis. Those were deeply uncertain times. I mean, there is no game plan for COVID. So what do you do? And yet there's more of it now. And I think it's because of the rat-a-tat-tat everyday tweeting that the president does and the constant talking that just sort of flips things all of a sudden.
Yeah, it's interesting. I mean, you take a look at that great chart in this article. Uncertainty, uncertain, and uncertainties had been mentioned on earnings calls 3,100 times this past earnings season. You compare that to the second quarter of 2020, and it was greater than even then, to your point. Just quickly wrap this into the broader market because, yes, okay, we have CEOs coming out on their earnings calls talking about how unsure they are, but yet the S&P 500 jumping by 6% in May.
Yes. Well, this is also part, so if you're an investor, you're uncertain too, because it's not just that what the CEOs are saying, it's that the stock market's a forward-looking mechanism, right? You know, you're betting on where things are going to go. And if you're at this very high level, is this the time to enter? Is this a time to retrench? How much of this is real? How much of this is, to Matt's point, is just pushing things down the road? And so the uncertainty filters into the market, and that's why, although we're coming off a banner month, things have kind of flattened out a little bit, and that's sort of the recent. The tariff up and downs, and yet yesterday the court threw a monkey wrench into everything. So you just don't know. And as an investor, you really don't know where the S&P is going to head.
You got 10 minutes. 10 minutes till stock open. 10 minutes.
I think we're about 4% from a all-time high on the S&P. So what do you do? When do you enter? And that's a tough call.
All right, Eric, great having you on the program. Thank you so much for joining us.
Thanks.
Eric Weiner there from Bloomberg News. Coming up, we discuss the tariff back and forth with Morgan Stanley's Mike Wilson, who says they think the bottom is in. So the second half is likely to be better than the first. This is Open Interest.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak
Picture's definitely
Europe,
changing
only
here, guys, on
Bloomberg
the dollar.
Television.
But just like how the picture changed to the upside, it can also change to the downside, okay? So we just got to be on standby. The only good thing is gold is still currently holding. I'm not liking the look of that H4 candle anymore. But we're still looking for that high. The only thing that I don't want is, we may have a, no, I'm not going to say it out loud, but, you know, what I don't want is us to retest the 2-hour candle again. You know, sweeping another low before going again. Do you know what I mean? We want a smooth time today. We want a nice smooth run. EU is looking incredibly bearish. EU is looking like it's going to swipe the lows. So let's see how that does. If EU, the thing about EU is because the area is so big, right? Because the area on the hourly is so big, like that's 45 pips. So this can give us a reaction anywhere inside of here. And to be honest, you know, the highest probable area is for us to retest yesterday's hourly candle, right? But I know, you know, markets doesn't necessarily always have to react out of candles. It can go to imbalances. It can test structural highs or lows, or some people call them support and resistance. You know, it doesn't necessarily have to go to that area. So we're anticipating where we can get in to the move. So if we have to look at this for a little bit, that's fine. Gift says in the chat, almost every Friday we get a big move either way. Hopefully we get that today. Yeah, let's see, man. Hopefully we're not getting a reversal Friday, because that's what it's looking like. It's looking like a potential reversal Friday where price goes the opposite direction. But let's just see, innit? Let's just see. We just gotta just chill, really. Wait for the picture to improve, and then we'll take a trade.
Fragility got priced. You know, we had
Let's
a big
listen to
sell-off,
Bloomberg in the
20%
meantime.
sell-off plus 30-35% in most stocks. And I think that the fragility now has moved to the bond market. You know, that's where the main concern is now, whether it's the global bond market with JGBs, you know, kind of getting out of bounds, and of course now with, you know, term premium in the U.S. Treasury market. I think that's where the risk is the greatest. The growth fears have subsided because, look, we did take the off-ramp on the tariff concerns. And from my perspective, I mean, like we were probably weeks away from having a recession. If those 140% plus tariffs had stayed on, I don't think there's any, you know, it's very little doubt that corporates would have had to take action with the labor cycle. But now that it's backed off and the stock market's up, you know who watches stocks more than me and us? CEOs.
Yeah.
Okay. So stock market recovers, loosens financial conditions. They say, you know what, hold off on the layoffs because things may be turning around. And I think we bought ourselves quite a bit of time, and that's why the market's responded to that. I don't think it's unusual.
You know, CEOs rarely admit that to us.
That's
on
why
air.
I was laughing.
Yeah,
They
exactly.
always say, I don't watch the stock on the day-to-day basis, but of course they do.
Yeah.
Mike, you think that the bottom is in and that the second half is going to be better, or at least you started the year saying the second half is going to be better than the first half. Do you still think that? I mean, obviously we came down a lot, but we came back a lot, and now we're, you know, flirting with 6,000 again.
That's right. Markets and economies are reflexive. Okay, we know that. And, you know, I think we had a unique view coming into this year. Our view is that things were already slowing dramatically, and particularly on earnings. Earnings revision breadth was rolling over. The AI story was losing steam. Okay, but all of those things now have bottomed from a rate of change standpoint. And that's what stocks care about. That was the focus of our mid-year outlook, was that the rate of change is now bottomed. It bottomed in economic terms,
right.
in you know, fiscal, monetary policy, I think is bottomed in terms of the most hawkish we're going to see. And that is all going to now lead to a better rate of change in the second half, which the stock market is already discounting.
All right, Mike, we are just getting started. You are sticking with us through the opening bell. That is Mike Wilson of Morgan Stanley. Much more coming up at the open next. This is Bloomberg.
and Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, Anti-Money Laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, and we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity.
Gift says, what did Gift you say? You know, Man United playing right now in Hong Kong. Yeah, I saw the notification going up. I think it's 1-1. Something silly like that. Something absolutely silly like that. Alright, so we are 10 seconds away from stock open. The picture for gold is completely changing. Right, this hourly candle is incredibly bearish, right? The past hour that we've had. We had a nice run. We stayed around the high. It did look like we were going to continue. Then we flipped. Okay, so now that we flipped, realistically, I still want to see us hold this low, right? Which is the prior hour candle's low, right? It's not looking like we will, due to the dollar continuing to push up higher. Okay, so again, it just means we just have to wait longer, to be honest. If we're looking for longs and we're not getting any sign of longs, right, there's nothing we can do but just wait. There's literally nothing we can do. You know, we've pushed up, slapped all the way back down, just gotta wait.
Which is lovely. They're ringing the opening bell today. The stock has tripled in the past 5 years. It's up 50% in the past 2 years. They're doing pretty well. First Interstate Bank System.
Also, GDX is now open. It's open for trading today. We've opened down. Let's see. Gold's really heading straight back down there, boy.
Let's start with an up arrow, and that is Ulta surging after raising its profit forecast for the year. A hard thing to do, but shares up 13%.
This doesn't look like it's going to slow down anytime soon.
Sort of wiggling between gains and losses in the pre-market. It's navigating the tariffs relatively well. It's rerouting its products and examining price changes. Traders still deciding what to do with that, but the big story for me today is what's going on.
Yeah, we've just got to sit on our hands for now. Just got to sit on our hands for now. If you are watching the stream and you're new to the stream, welcome, welcome. Come say hello inside the chat box if this is your first time joining my stream. And also, if you enjoy this type of content, don't forget to leave a like. And also, whilst you're down there, there is a link to my free Discord. It is in the description box down below. You can join. What's happening, Ritesh? How you doing, bro? You good? You good? You good? Welcome, welcome, welcome. We're looking for longs on the majors. It's not really showing that to us right now. How about yourself, Ritesh? What are you looking at? You're in a gold sell. That's interesting. What's the setup for your gold sell, bro? Let me know in the Discord. Let's have a look. If you've got a setup or something.
Really a handful of companies that came out overnight and beat expectations. Bank of America says the latest turn by the Trump administration to favor tax cuts and lower tariffs could spell trouble for markets. The flip in U.S. economic strategy could incentivize traders to ditch bonds and pile back into AI and crypto trades, which would risk inflating a market bubble, according to the team led by Michael Hartnett. Are we already back to a bubble? We're here with Morgan Stanley's Mike Wilson. That seems... wow, that's a That's an interesting call. That's a way to get noticed on a Friday.
I mean, bubbles are, apparently every year now in certain things. I mean, I do agree with Michael in the premise. Okay, we've been in an environment for, I would say, post-GFC, where policy has
So
sort
GDX
of
is
elicited,
pumping,
mini
guys.
bubbles in certain assets. So
GDX has
money
been pumping
moves to the
very
hot
hard recently.
kind of toy, whatever
Pause.
it might be.
It's
And,
been jumping
but
up,
it's nothing
jumping
like
up,
the
jumping
late
up, jumping up.
1990s. Like, I don't
Gold
think
is
what we're
yet to
seeing in
react.
AI, anything like the late 1990s.
So I'm
is
going to
just not
anticipate
broad.
if we can
There are 4
actually
large companies spending all the money. There are maybe
see a
8 to 10
reversal
big
here on
beneficiaries of
gold.
that spending.
Maybe
That's
the longs
that was
are
like a
still
mini
on.
bubble. We talked about that at the end of last year. One of the reasons we were a little bit more negative on some of those stocks coming into the year was because there was a deceleration.
But let's see
in
how
growth.
it does.
But it's not like in the
Right now, gold's
1990s
not
when you had
really
every
reacting,
enterprise
but
overspending on equipment. You had this huge IT spending bubble.
you just
So
posted in
I
the Discord?
don't agree
Okay.
that we're in a bubble, but I do think the policy we've chosen, okay, which is to
Okay,
at
I
every
got
sign
you.
of trouble come in and
So you're going
stop
for
it.
a session
It does
short.
elicit that type of behavior where that's why you get this chasing going on because
Okay, I mean, let's see how that does, bro. I'm currently looking at a long for gold.
Yeah, and I mean, largely, if you take a look over the grand scope of time, buy the dip has worked because stocks go up in the long run. But I take your point. It kind of feels like bubbles in the eye
Well, let's see
of
how
the
it does.
beholder here. But I am curious where you think we go
Right now, your
from
short
here, especially when
would
it
be in
comes to the
profit,
AI
so
trade. That narrative had been out there
yeah.
that it was getting kind of tired. There was a lot of existential worries over DeepSeek and cheaper models coming
Canceling
through.
leases.
We need to see how this hourly
But it
candle is
feels
going to
like,
close, guys,
especially
man.
with these NVIDIA results that were this week somehow. It feels like a long time ago.
Either
we're
way,
still
yeah.
putting our foot on
If
the
gold's
gas
going to
here.
be a buy or going to be a sell, whatever it's going to be, we will be a part of it. Yeah, we will be a part of it. We definitely will be a part of it. GDX is still continuing to jump higher. Still. See stock market. Okay, had a drop. I'm not too sure what this was. Was this news? I think this was a news candle. Had a drop, slight retracement. Session is open now, so we need to give it some time to breathe. But yeah, GDX is really up.
Is that what drives us to 6,500? I mean, that combined with the fact that tariffs turn out to be not so bad, at least at these levels, and no one cares if we blow out the deficit another couple $1 trillion.
Well, it's another part of our rate of change argument, right? So that AI now is moving to
focus on the rate of change. That
exactly.
was the title of your note.
Exactly, and so like AI was a negative in terms of ROE and return on invested capital. It was a cost. And now the rate of change on AI, from a broader market perspective, is turning into a tailwind for margins and productivity, and that's what the market is. That's another factor in our more positive view over the next 12 months.
Well, I actually want to go back to the bond market. Speaking of the deficit, you
Yes.
mentioned before the break that things are actually looking a little bit fragile, not so much in the equity market, but perhaps the bond market. And I'm curious, in your role as chief U.S. equity strategist, how much time are you spending looking at the 10-year yield?
Well, I spend a lot of time looking at the 10-year in any environment because it is the pricing mechanism for all assets. As we've said for years now, 450 is kind of that crossover point, and it still continues to be a crossover point. When you get north of 450 on a 10-year, you start to see negative correlation to equity multiples. Okay, so we're right around that level. And by the way, I'm pretty sure the authorities know that as well. So they try to defend those levels. I don't think we're going to see a real defense.
Authorities meaning the Fed.
All of Fed, Treasury,
but not Congress. You're not.
Well, Congress is a different animal. I mean, and I've made this statement before. It's maybe controversial. I believe Treasury is somewhat captured by Congress, right? They got to fund it, and the Fed is somewhat captured by Treasury. They got to help out. So they work. It starts with the spending, and then it trickles down. And so, I don't think we're going to see an aggressive action until we get to 5%. If we get to 5%, we said this last time, going to 5% is going to be bad for stocks in the short term.
Right.
However, if we get to 5%, I'm pretty confident they're going to intervene.
Well,
and that will be positive.
For better or worse, it feels like we are just glued to 4.5%. We just toggle around in a range around
until we
that
get
number.
over it.
Until we get
and then
over it.
we watch for 5.
But then we go back down, and we're back at 4.5%. At least that's been the story of the past couple months. So, Mike, what do you make of that?
Well, I would say the other side of that too is let's not ignore what's going on in Japan. Okay, so they're way ahead of us in terms of using the money printer to kind of backstop bond market. They've been doing it for 30 years, right? And QE, they were the originators of that, and we followed suit. And so now the question is, okay, now they have inflation. Okay, and the yen, by the way, is a big part of that. So the question is, can they control the yen's movement? I don't know if they're more focused on the yen going south of 140, okay, or they're more focused on keeping JGBs from blowing out to higher levels. But it appears to me, as an observer of markets, that when the 10-year yield or 30-year yield gets to a certain level in Japan, or the yen gets closer to 140 against the dollar, we also see intervention. So these are all related. These are all related. But the fact that we're seeing these things get pinned around these key levels suggests to me that they're observing it, and they're gonna try to control that.
All right, keep an eye on Japan. We'll be doing that over the weekend. Hope you have fun too. That is Morgan Stanley's Mike Wilson. Great to speak with you. Let's take a closer look at this market right now. It is the end of the month, and things could get weird as we get closer to the close, but at least where we stand right now, we're looking at very slight losses. And you take a look at the breakdown of this market, there's more breadth to the downside. You can see that only 139 names in the S&P 500 are higher right now, much more to the downside. You have one relatively big gainer today, and that is Costco. This is an earnings story, of course. We heard a little bit from the company about how they're navigating tariffs, and shareholders seem to like that news. You also have Netflix and Palantir moving higher. You take a look to the downside, though, and this is where things could get dicey, because your biggest loser on a points basis right now is NVIDIA, chopping about 5 points off the index, down about 1.3%. Then you have Apple, Amazon, Tesla also trading to the downside as well. That could become a big weight as we get deeper into the trading day. But let's take a look at the sector level as well. It's broadly the same story, limited upside here. Consumer staples taking the lead right now. That, of course, comes down to Costco. You also have utilities in the green as well. A very defensive setup on the last trading day of the month. You go down the list right now, tech, healthcare, and energy in the red, Matt Miller.
Yeah, all red. We could turn around and see some gains at the end of the day, right? It's
could get weird.
The last day of the month. A lot of window dressing could be in store. Coming up, one more measure in President Trump's proposed tax bill is alarming Wall Street. A real concern, especially for foreigners or investors in foreigners.
All right, guys.
We'll tell you what it is next.
Gift says, bro, I'm a bit confused right now. What are you confused about, bro? What's confusing? Nothing much going on right now. We've had a slight jump. We've moved back down. Gold had a slight dump off. It's moved back up. Still watching GDX. Just still watching pairs, man. Still watching pairs. We have gone, sideways really. The whole day so far, even from London session. Push down, come up, push down, come up, push down. So yeah, we just got to keep watching. That's all. Nothing more, nothing less.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, Airbnb getting cut to a sell over at Truist thanks to soft summer leisure travel trends in both the U.S. and in Europe. Next up, we have Rockwell Automation getting raised to a buy over at Barclays. The firm cites an improving sales outlook for the manufacturer. And finally, I want to highlight the ag firm AGCO getting downgraded over at Citi. The firm says it sees less upside in shares falling a 30% post-Liberation Day rally. Shares currently off by about 2%, Matt Miller.
All right. Thanks for highlighting AGCO. More now to on one of the most read stories on the terminal, and one that I have been obsessed by since I read it last night. It's so well written. I highly recommend you check out this story on an obscure tax item in one big, beautiful bill. Wall Street is growing wary of what is known as Section 899, or the Revenge Clause, Trump's tax treatment of what he's doing with tariffs. If signed into law, it could repel foreign investors even more. Deutsche Bank says the tax amounts to, quote, weaponization of U.S. capital markets into law that challenges the open nature of U.S. capital markets by explicitly using taxation on foreign holdings of U.S. assets as leverage to further U.S. economic goals. We're joined now by Bloomberg's managing editor for markets and editor on this story, David
Direction for
Papadopoulos.
gold wants to take looking bearish on the 1 hour. Rita says, yeah, that's gold, messing with your mind. That's exactly it. So look, we just gotta wait, man. I mean the long that I took here is just come back. It's literally just come back. I took a long, if you guys heard the gavel. I just had to take it out in profit, to be honest, because this is dropping. Okay, so if we just go back to the drawing board. Ooh, that 4 hour candle is not looking good. Okay, so here's what I'm seeing, yeah? If I'm still going to be on the side of the longs, right, I'm going to look at the most recent low that we've created, which is down here. Okay, I'm going to look at that most recent low. We're going to see if that gets taken out. The thing is, the area that we're looking to go long from, which is this 2 hour candle, you know, price can react anywhere from inside there, realistically, right? Obviously, we've had a nice reaction already, you know, 160 pips. But if we're pushing down, we just need to take it easy. Okay, there's no rush. There's no rush, there's no rush, there's no rush. So no one should really be in any positions. Dollar is just taking out that high now. Okay. Okay. I see. All right, so now with dollar taking out that high, I'm still going to look for longs on this. I'm still going to look for longs on EU. Right, I don't think this is a complete sell-off. Right, we've just reached 50% of that imbalance. We've also got a test of this H1 candle as well. What we could do potentially is go for a short-term sell. Right, that is possible. We can go for a short-term sell. That's something like that I would look at later. All right, let's see what kind of reaction we get here for EU. right? Also on the DXY as well. Let's see what kind of reaction we get here. You know, do we get a pullback and then a continuation higher? All right, we just ran those highs, so again, it's not anything really that crazy. Gold is heading lower and lower and lower. Okay. Okay.
I mean, John Farrow always asks on surveillance if we can still expect.
So yeah, we're still in this. We're still in this. Not to worry at all. Not to worry at all. Ritesh says if gold passes 32.82, then it will drop more. What's 32.82? 32.82 is around here, so this low. Yeah, let's see, bro. Let's see if it will drop. You might be right. You might be right. You know, I had my bias at the start of the day, so I'm just following the bias that I had. That's all it is. I tried not to change my bias too much. I mean, could it be a thing where the dollar's not ready to drop this week and take out the low this week? Could it be a thing where the dollar wants to do that next week? Yes, it's totally possible.
Where does this go? Because you take a look at the market reaction to this, there hasn't really been much to speak of. I mean, reading this article, this is the most detailed account I've read about this proposal, and I'll stress that it's a proposal. What is the...
Well, but it's a proposal, to be clear, but that has been approved by the House. So, yes, the Senate could tear it up. It's possible, but it is our well, we don't, frankly, exactly know what's going to become of it in the Senate. There's speculation that it will indeed get thrown out. There are also some who believe that there is going to be Republican support for it in the Senate. We'll find out. We don't exactly have that answer right now. What I can tell you is this. Tax lawyers, going back 2 months ago, were initially onto this. While the rest of us were sleeping on it and Wall Street was sleeping on it, they were starting to spread the word. It only really jumped up onto the radar of Wall Street a day after the big, beautiful bill was passed last week. There was small rumblings Friday, slightly louder rumblings early this week, and then in the last couple of days, it's gotten really cacophonous out there. And
I hadn't heard anything about this. I hadn't
You missed
read
it all.
I hadn't read a less detailed. I hadn't read a broader brush strokes account of this to the point where I was actually surprised that Yi and Liz got so much commentary from the pros. I mean, everybody's been sidetracked by the taco trade.
Yeah, that's true.
And now we're reading about Section 899.
We should have all been listening to those tax lawyers.
Yes.
Luckily,
Matt, listen to your tax lawyer.
there you go. Luckily, of course, David Papadopoulos and the markets team had it covered. Really appreciate the time and reporting. Encourage everyone to go on Bloomberg.com and read that story. But coming up on this program, the S&P, it had a stellar month, but cracks are emerging as we roll into June. We'll tell you why next. This is Open Interest.
Season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins.
We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on stocks, and I feel less confident about my prediction.
Gold's just dropping. Gold's taking out that low there again. Which is interesting.
It's the best month of May since 1990. Off a little more, 0.75%. But with these big behemoths down so much,
4-hour candle's looking crazy. That 2-hour candle's looking crazy as well.
to get a gain. Apple is down 1%. Google off 1%. Tesla down a little bit less.
I'm looking at this hourly candle and thinking if this hourly candle could be a fake out.
Only Costco, at least on this board of chiclets, only Costco is gaining here.
There you go. Well, we'll be speaking about Gap in detail with the CEO next hour. But let's talk a little bit more about the month in markets. The S&P 500 now up by only 5.5% in May. That is still its biggest May gain since 1990. By far the best month of 2025. Let's discuss with Bloomberg Markets reporter Michael Ball. And I just keep coming back to the point that sell in May, especially.
I'm taking a small buy on gold.
Heading into May.
Yeah, this year was different because of what happened in April. The rebound in May made sense from a lot of perspectives with the step down in max protectionism and tariff war. But overall, now we're going into a much more questionable period for the rest of the summer.
Taking a little wee buy on gold here.
A lot. I mean, that's 25 years
Again, obviously there's no real confirmation for this yet. So if you are going to take this, just really small risk, because gold is looking incredibly bearish right now.
I mean, did we just plummet so far in the month previous that this is about catch up?
Yeah, I think so. I think a lot of people just sort of went full out of the market based on the Liberation Day.
Looking incredibly bearish.
We saw the slow pivot back into a less of a
I want to see what the dollar wants to do for now.
from the Trump administration. Everyone found themselves
I don't feel, in a rush as of yet to take any trades, just because I haven't seen anything that's been clear and concise. Obviously, there's been opportunities to go long and opportunities to go short, but that should never really be the case if, the direction is clear. Okay, so still going to keep watching, keep monitoring.
I think some of your other guests touched upon it. There is more uncertainty now. We're back to this. What will Trump do next? He seems to be on the ropes again. He's lost some credibility. He's obviously being insulted.
Wow, geez, looking crazy bearish.
And on top of that, we haven't really got anywhere with the budget bill. Now we
A 4-hour candle's looking crazy right now.
That was actually a tailwind for stocks because it would be more stimulative than thought. Now that
Okay.
may be the case. Obviously, there's still several more weeks till we get more of a final.
Let's see how this does, guys. Let's see how this does.
Creates greater uncertainty. No one wants to step in front of that. And then we're all still sitting here waiting for the hard and soft data to tell us really what the real story is. Are we going to go down to the soft data, which has been weaker, or are we going to come up to the hard data, which is still hanging in a little bit, but cooling?
All right, Michael, great to have you on the program. Bloomberg Markets reporter Michael Ball. You can read his work on the terminal by typing MLIV GO. Coming up in the next hour, JP Morgan's Mira Pandit on the muted reaction to the tariff court drama and some soft data at 10 o'clock.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Okay, guys.
This is CBS News.
All right, let's take a look. So, hourly candle has now closed. Incredibly bullish, right? As you guys can see on both the DXY on EU as well, it's closed incredibly bearish on GU, incredibly bearish on AU as well, right? So far, there is not enough evidence to go long. Across the board, there's not enough evidence at all. Okay, even for gold, there's not enough for us to go long on gold. Even though we wanted to see gold go long, there's not enough data. Okay, so what we have to do is just sit on the sidelines. If gold's not going to go up today, or maybe gold may drop lower, maybe we can look at it next week, or we can look at it during the later stages, or maybe we go short on gold. Okay, now for the time being, there's just not enough data or evidence for me to go long on any of these majors. Yeah, so I'll just recommend sitting on the sideline. If I notice anything on gold or on the DXY, I will let you guys know. I feel like we just have to keep watching this, guys. If you're already in shorts like Ritesh, then obviously, you know, moving stops to entry, securing some partials, whatnot, cool. But if you're not in it, you just gotta wait for a bit. Just gotta wait for a bit. But I'm here. I'm gonna end the stream now, but I am here. I will be watching. I will be obviously having conversations with you guys inside of the Discord as well. So I reckon in this next hour we should see something. But this drop on gold is quite telling, man. It's quite a telling drop. Quite aggressive. Alright guys, thank you for joining me today on the stream. I'll see you guys all inside of the Discord Money Day. I'm gonna go make my second caffeinated drink today. Peace.